Welcome, everyone, to the Deep Dive. Today, we're jumping into a really vital corner of the global economy, maybe one you haven't thought much about.
Hmm.
It's what the analysts are calling the global job needs and car leasing market.
Right.
Now, look, this isn't just about, renting a car for your holiday. It's much bigger. Think of it more like the strategic engine, keeping businesses moving.
Exactly. It's fundamental for operations.
Yeah, like sales teams needing cars, execs needing transport, even whole fleets for logistics.
Mm.
It's kind of this unseen service, but it really powers global commerce and mobility.
It absolutely does.
So our insights for this deep dive, they come from a really thorough analysis. It's by cognitive market research.
Okay.
And they've mapped out market performance from 2021, projected out to 2025, and they give us this long-term view too, all the way to 2033.
That's a good range.
Right. So our mission today is really to unpack these numbers, understand what's behind them, and figure out what they actually mean for the world economy.
Makes sense.
And the overall scale is, well, it's pretty staggering. Back in 2021, this market was already big, like $70.8 billion.
Significant.
But here's where it gets really interesting. It's projected to almost triple. We're talking about reaching $190 billion by 2033.
Wow. Triple.
Yeah. That's a strong compound annual growth rate, the CAGR, nearly 8.6% year over year for more than a decade. What's your first reaction to, that kind of growth?
Well, that kind of growth, almost 8.6% sustained over that long. It's not just a blip, is it? It really signals something more fundamental.
Like what?
It points to a real shift in how businesses globally are managing their operations, their assets. This job needs and car leasing idea, it's highlighting this crucial service. It's all about employee mobility, operational flexibility, smart fleet management for, companies of all sizes.
So it's about being smarter with resources.
Exactly. Businesses are optimizing, making sure their people, their products can move efficiently. But crucially, without the huge upfront cost and hassle of actually owning all those vehicles.
Right, the capital expenditure.
Precisely. So this market's growth path, it tells us that for businesses everywhere, being agile, being efficient, these aren't just nice-to-haves anymore. They're becoming core strategies.
Non-negotiable, almost.
Yeah, pretty much non-negotiable if you want to stay competitive.
And looking at the raw numbers, you really see that story unfold. So $70.8 billion in 2021.
Yep.
Projections hit nearly $98.5 billion by 2025.
Okay, steady climb.
And then, like you said, that massive leap to $190 billion by 2033, it feels like it's speeding up.
It does seem to accelerate towards the end of that period.
So what do you think this really consistent, strong global growth tells us about, maybe, global business strategy right now?
Well, what's fascinating to me, especially with that nearly 8.6% CAGR over a decade plus,
Right.
It's more than just the economy growing generally. It
Wow.
really reflects these changing business models that are prioritizing, asset-light approaches, operational agility.
Makes sense in today's world.
Absolutely. Think about it. Supply chain issues, inflation, tech cycles getting faster. Companies see huge value in leasing.
How so? Yeah.
Well, it lets them hang on to their capital, manage cash flow more predictably. Plus, they can easily upgrade fleets to newer, maybe more fuel-efficient or electric vehicles without worrying so much about depreciation or maintenance headaches.
Avoids getting stuck with old assets.
Exactly. So it's a clear sign that companies worldwide are thinking more strategically about how they use their resources to stay competitive, stay adaptable.
That really clicks, especially given how fast things change. But, okay, these global numbers, they paint a big, powerful picture.
They do.
But the real magic, you often find it when you zoom in, right?
Yeah.
So what does this look like when we start breaking it down by region? Where are the real hotspots?
Absolutely. The global average is one thing, but the regional stories, that's where you see the really distinct drivers. Some clear patterns emerge.
Okay, so let's start with the fastest ones. The data clearly points to Asia Pacific leading the charge, right? It's absolutely booming. Highest regional growth rate, what was it? Over 9.1% CAGR.
That's huge, yeah. 9.186% to be precise.
Incredible. And the market size there, it's set to basically triple from around $27.8 billion in 21 up to nearly $80 billion, $79.8 billion by 2033.
Just massive expansion.
And inside Asia Pacific, some of the country stories are just wild. Take India. It's leading the entire world, not just the region. Highest overall CAGR, over 10.2%.
10.218%,
Yeah.
really phenomenal.
Its market is just exploding, more than tripling from about $3.2 billion to over $10.4 billion. Then you've got China, obviously the giant in the region,
Still dominant. Yeah.
growing from almost $9.6 billion to nearly $28 billion. Still a very strong CGR there too, 9.3%.
That's very strong.
And we also see really solid growth across Southeast Asia as a whole. Places like Singapore showing growth rates near 9.7%. Just incredible momentum.
It really is.
Okay, so after Asia Pacific, the second fastest region is South America, powering ahead with, what, almost 8.9% CAGR?
8.909%, yeah. Another really high growth zone.
And again, nearly tripling in size. From just under $4 billion in 2021 to over $11 billion projected for 2033. And you see strong performance across the board there too. Argentina, a really significant 9.4% CGR. Chile, also impressive, over 9.1%. And Brazil, which is the biggest market there,
Right.
still holding a strong 8.7% CGR. So it's widespread growth.
It seems to be, yeah. Not just one or two countries carrying the region.
Let's quickly touch on the Middle East, also showing really healthy growth, nearly 8.8% CAGR.
8.779%.
Solid. Market size projected to go from $3.3 billion up to over $9 billion by 2033. And here, the UAE looks like the regional leader in terms of growth rate, 9.3%, almost 9.4%.
It's strong, yes.
And Turkey also putting up big numbers, around 9.1% CAGR.
So what really jumps out at me from looking at these high growth regions, Asia Pacific, South America, the Middle East, it seems like a mix of powerful economic forces coming together. You've got rapid industrialization, urbanization that naturally fuels demand for commercial vehicles, for fleets.
Right, building things, moving things.
Exactly. And many of these places also have this growing middle class, a shift towards service economies, which means more people needing to get around, more goods needing delivery.
Mobility becomes key.
It does. And maybe most critically, especially in emerging markets, buying vehicles outright can be a huge capital burden for businesses.
A major barrier.
It really can be. So leasing becomes this incredibly attractive, accessible option. It lets businesses scale up quickly, get the vehicles they need without tying up all that precious capital.
So it's a pragmatic solution that fuels that fast growth.
I think that's a big part of it, yeah. Especially where economic development is happening quickly.
That makes a lot of sense. That accessibility point is key. Okay, so now let's maybe pivot a bit. Let's look at some of the more established markets, and also Africa, which is developing. Now, they might not always have that same blistering pace as Asia Pacific.
Right, the percentages might be slightly lower.
But they're still showing really solid, consistent expansion. They're mature, maybe, but definitely not slowing down overall.
No, absolutely not. The dynamics might be a bit different, but that fundamental need for mobility solutions, it's still there and it's still growing.
Okay, starting with North America, still a very strong trend. CAGR over 7.8%.
7.822%. Robust.
And the market size is set to more than double, from almost $17 billion, $16.9 billion in 21 to over $41.6 billion by 2033.
Still huge growth in dollar terms.
Definitely. The U.S. is, well, it's by far the biggest single market, on track to hit over $32 billion. The CAGR there is solid, 7.6%.
Okay.
But interestingly, Canada actually shows a stronger growth rate than the U.S., almost 8.4% CAGR.
Oh, interesting.
And Mexico also looking strong, over 8% CAGR as well.
So healthy growth across the continent.
Seems like it. Now let's hop across the Atlantic to Europe. Another market keeping up a healthy pace, 8.1% CAGR overall.
8.137%. Very consistent.
Europe's projected to grow from $16 billion back in 2021 to over $40.6 billion by 2033. So similar scale to North America in the end.
Roughly.
And within Europe, Germany seems to have the highest regional CAGR, almost 8.9%.
8.864%, leading the pack there.
Followed pretty closely by the UK, that's 8.5% CAGR. And Spain, not far behind either, over 8.4%.
Strong numbers from major economies.
Yeah. It's maybe worth noting, though, the contrast with Russia. The data shows a lower CAGR there, 6.7%. Still growth, but slower.
That's an interesting comparison point within Europe, yeah. Different market dynamics at play, perhaps.
Definitely. But finally, let's just quickly highlight Africa, showing solid development, CAGR over 8.2%.
8.202%. Good potential there.
The market there is expected to grow significantly, too, nearly triple, from about $2.8 billion to almost $7.8 billion by 2033.
Smaller base, but strong percentage growth.
Exactly. And South Africa leads the region there, strongest CAGR at almost 8.9%. And Nigeria also showing robust growth, over 8.4%.
So if we try and, connect this back to the bigger picture, the consistent, strong growth we see in these more mature markets like North America and Europe,
Uh-huh.
and even in a developing region like Africa. It signals maybe a different set of drivers compared to those super fast growth regions.
How so?
Well, here it seems less about that initial adoption phase and maybe more about the ongoing evolution of corporate strategy. Even well-established companies are increasingly using leasing.
For efficiency.
Yeah, for efficiency, for more sophisticated cash flow management, and maybe to hedge against risks like vehicle depreciation, maintenance costs, especially when the economy feels uncertain.
Makes sense. And for Africa.
For developing African nations, I think it speaks more to that foundational economic expansion. New businesses starting up, existing ones scaling, and they all need reliable, cost-effective ways to move people and goods.
So it supports growth there.
Absolutely. It really highlights how this is a universal business need. It just adapts and thrives across all sorts of different economic stages and market maturities.
Okay, so pulling this all together, what does this really mean for you? Listening in, trying to understand global trends and how different markets are, linked.
Yeah.
This deep dive into what might seem like a pretty specific niche, right? Job needs and car leasing.
Yeah.
But it actually tells us some really profound things about the global economy.
Exactly. It really teaches us that global business isn't just linked by trade and goods, it's deeply connected by these fundamental operational needs.
Mobility.
Like mobility, exactly.
Why?
The fact that we're seeing this pervasive growth across such diverse regions, it highlights just how essential flexible employee mobility and efficient fleet management are pretty much to every sector you can think of.
Manufacturing, services, retail.
Logistics, you name it. It really underscores this global move towards operational flexibility, using assets smartly. Businesses everywhere are looking for ways to optimize their capital, be more responsive. And it raises an important question, actually. Maybe this consistent growth in car leasing, maybe it's not just another market trend. Could it actually be a powerful, kind of under-the-radar indicator?
An indicator of what?
Of a company's strategic shift towards, let's say, capital efficiency as a real competitive advantage in this fast-changing, sometimes uncertain world.
Okay. That's the aha moment, isn't it?
Maybe.
That even data from what looks like a niche market can actually reveal these bigger truths about the world's economic pulse, about the strategies businesses are using everywhere.
Yeah.
It's a good reminder, I think, that every number, every growth percentage, it's part of this much larger story. Innovation, adaptation, that constant drive for efficiency.
Well said.
So as we wrap up this deep dive, let's just quickly recap the main takeaway. The global job needs and car leasing market, it's a seriously dynamic sector, projected to soar, remember, from $70.8 billion in 2021 to an incredible $190 billion by 2033. It's a market really defined by that vibrant leadership from Asia-Pacific, especially India, but also by consistent, strong performance right across the globe, Americas, Europe, Africa.
And maybe building on those strong projections and the drivers we've talked about, here's a thought for you to consider going forward.
Okay.
How might future innovations think widespread electric vehicles, or maybe even autonomous vehicles down the line?
Right, the tech changes.
Or even evolving work structures, like more remote work, the gig economy continuing to rise. How might those forces further transform or even redefine this job needs and car leasing market beyond these 2033 forecasts we've been looking at?
That's a great question.
The forces shaping how we move, how businesses operate, they're always changing, just like these vehicle fleets.
Absolutely. A fascinating question to chew on. Well, thank you for joining us on this deep dive into the global job needs and car leasing market. We really hope you'll keep exploring the world's fascinating facts and figures with us.